Apple's new savings account offers 10 times more interest than the US average and draws $1 billion in deposits. So, in short terms, you could actually make some money by depositing money into the Apple savings account. But let's get into it. So, Apple's new high yield savings account, which is dangling an interest rate that's 10 times the national average, has been swamped with customers who have deposited a total of $1 billion during the first 4 days since its launch. The iPhone maker's foray into commercial banking has been a successful one, according to Forbes. The account offers depositors a 4.15% annual return, which far exceeds the less than half a percent that is typically offered by banks. After just 4 days, the service, which is only available to holders of Apple's credit card, Apple Card, numbered 240,000 customers, the magazine reported. March data from the Federal Deposit Insurance Corporation showed consumers earned an average of 0.37% on savings in bank accounts, which, by the way, I've seen as low as 0.01% on savings accounts. So, like, these big banks are garbage in terms of just keeping your money in there. On the day it launched, depositors stashed $400 million into their accounts using the service, which is being offered in partnership with Wall Street investment giant Goldman Sachs. The Apple rate is higher than the 3.9% Goldman offers for an online savings account at its digital consumer bank, Marcus. Regional and small banks are competing for deposits by dangling promotions, including higher rates and cash bonuses for opening new accounts. The moves come after Ratto consumers moved billions of dollars to banking giants from smaller lenders in March following the failures of Silicon Valley Bank and Signature Bank. The banking sector was further rattled on Monday after the FDIC took control of failed lender First Republic Bank and brokered its sale to JP Morgan Chase, which acquired $92 billion in deposits. Shares of Apple were trading at around 0.5% lower as of 2:21 p.m. Eastern Time on Tuesday. The Apple Savings account can be monitored through a dashboard that's integrated with Apple's digital wallet. And before the company rolled out the service, cash rewards were automatically posted into Apple Cash, a prepaid digital card whose annual deposits are worth an estimated $3.8 billion. So rewards offered by Apple Cash will now be deposited into the high yield savings account, though holders are not permitted to exceed the $250,000 FDIC insurance threshold. So that's interesting. So they actually block you from going past that 250. That's actually really interesting. Now, what's also interesting, 4.15% is pretty nice, right? That's what it was. Yeah, 4.15%. The thing is, you can make about 4.5% right now on Robinhood if you're a gold member, right? And there's other like investment brokerage accounts or brokerage accounts where you could basically make that much money in terms of like just keeping your cash there, right? Now this is also something to really think about too. Just because you're getting the 4.15% or 4.5% if you're using Robinhood or whatever isn't really that big of a deal because inflation is so high. Like, this is really only good if you're stockpiling cash for a specific reason, right? So, for example, let's say that you're saving money for a down payment on a home, right? Or you already got a down payment for a home. Well, then these high yield savings accounts are perfect for that sort of thing because you're just gaining free money in a sense by leaving your cash in there until it's time to buy a home. Now, maybe you're holding cash in terms of like waiting till the stock market dips a little bit and then you're going to put money into it. That's also an option as well. So, like, just keep that in mind, right? Like, don't view these as like investments. view it as like, okay, maybe I'll leave my emergency fund that I'm basically never going to touch into one of these high yield savings accounts just because I can make more money than these big banks that basically pay me nothing at the 0.01% or 0.31%, right? So might as well, right? Because depending on how big of an emergency fund you have or how big in terms of like the balance for your cash is, like how much cash you actually hold on to, you can make anywhere in terms of like, you know, maybe extra cash just going out to eat per week, or you could literally make enough money per month to pay your mortgage if you got a mortgage, right? Or like pay like a bill every month, depending on how much cash you have stockpiled, right? Like if you got, for example, if you got basically around $50,000 in like a 4.5% high yield savings account, you probably got a good amount of money coming per month, right? I'm talking like over $100 per month, right? Which is pretty nice. That's just an extra amount of money coming in that you don't really got to worry about, that you didn't have to like do anything for. It's a transfer money, and it's literally just lazy money, right? Another way to view it, this is a way that you could potentially make like passive income. But again, like only be open to doing this. One, if your money is actually big enough for it to actually make a difference, right? Like if you're in that like 20,000 plus range, go ahead and do it. If it's just like your emergency fund, if you don't plan on like basically touching the cash at all, or you're just saving up for a specific opportunity, go ahead, right? But yeah, what people need to understand is like this isn't a game changer, but it's just basically a nice benefit, right? So for example, what I'm personally doing, I have money set aside for a down payment for a home, right? Now, that is sitting in an account with 4.5% interest, right? So I'm making almost 200 bucks a month by just leaving it there until I find a good opportunity, right? Or a home that's like very devalued that, okay, it makes sense to do that, right? And the account is just getting higher and higher and higher without me having to add more money to the account in terms of the cash balance. So that's my way of doing that, right? Because I don't really plan on really touching that cash except for putting it for like a down payment for a home. Anyone else could basically just do that for like their emergency fund or their own down payment for a home. It's just a lazy way to basically eat your cake and your ice cream as well, right? Because it's just there, right? Might as well take the opportunity, right? You might as well make 4.15% or 4.5% without having to really do anything, right? Because I gotta say, these big banks that pay that 0.01%, when you see that, you're like, wow, I had so much, like this amount of money inside your accounts, and you were basically making 12% off of me, but giving me basically 0.01%. That ain't cool. That's pretty messed up, you know? Let's see some of these comments. Let's see. Sure, the Apple geniuses are now bankers because obviously it's going so well and it's so easy, anyone can do it. Money market rates are over 4.5%, so what is the big deal? Some brokerage accounts offer more interest, like Interactive Brokers. And like I said, as an example, Robinhood, I think E-Trade might be doing that as well. Uh, Other like brokerages are offering pretty good deals. I think Ally is like the Ally Bank, which is I think the 25th largest bank right now. Their high yield savings account I think is paying the 4.5% and there's no fees or anything like that. So like there's options out there. So if I was you, since I'm already doing this anyways, I would put money that I don't plan on necessarily touching or necessarily investing. Like if I just have like cash that like I am holding on to, instead of only making 0.01%, I wouldn't mind making 4.5%. That's my viewpoint. It's just lazy money. You can view it basically like passive income, like income that you basically don't have to do anything for.